During large corrections like we're having right now, it is very beneficial to take a macro perspective or bird's eye view of what's going on, taking a look at the news that's being published and analyzing that to figure out what the hell is going on. Of course, things like this can be very scary, but it's important to compare the narrative of the last bull market compared to this one. Let's evaluate whether the market sentiment is kind of like 2018 right now, or if it's more like 2017, the middle of the year when we are just on our way up, or if everything is completely different. If that sounds good to you, make sure you like, subscribe, and watch to the very end because you do not want to miss videos like this. My name is Kyle Chassé, and I've been in crypto for nearly 10 years. On this channel, we go into deep dives about the best projects in crypto and tell you what you need to know in the world of blockchain. Now let's take a look at this headline. When I first read this, it really blew my mind. Wall Street tumbles at open as crypto crashes, Dow down 410 points. Why did this blow my mind? Well, typically what we see is we see the crypto market correlated and following the traditional stock market. So if we see a bad day in the stock market, we typically see a bad day in the crypto market. However, this headline is insinuating the complete opposite was true. It is saying that the stock market, when it opened, crashed because the crypto market was crashing. That is a complete reversal of everything that we had seen before. There is a lot of fear right now as the markets have been flooded in red, and there's been a lot of FUD spreading, like this quote from JP Morgan. Major institutions dumping Bitcoin for gold. Look, we all know that JP Morgan and Jamie Dimon have been notorious for talking crap about Bitcoin while the whole time going behind and buying it themselves. So it wouldn't surprise me if this was another ploy for them to create more fear in the market, crashing the price, while JP Morgan's up scooping up all your Bitcoin. Does this behavior sound like a company that's bearish on crypto? Don't think so. And finally, let's bring in some good news because, I mean, we're all sick of hearing all this FUD and crap that's out there. Last summer, a team at the Boston Fed started working with a team at MIT to find out what it would take to build a central bank digital currency. And this summer, they're set to release the results of that study. And what does this mean exactly for you? Well, this doesn't exactly have an immediate correlation to Bitcoin or the decentralized crypto space. In fact, a central bank digital currency is the complete opposite of what we like in this space. It's completely opposite of Bitcoin, Ethereum, any permissionless open source public blockchain. A central bank digital currency is actually dystopian and scary as hell. I mean, imagine that you have zero control over your finances. That means that there is no more cash under the mattress for a rainy day. If you get a parking ticket, don't worry about sending in the money because they'll just take it directly out of your wallet for you. But there is a good side. There's a silver lining to the central bank digital currency. What am I talking about? I'm talking about the fact that a lot of industrialized countries went straight from cash and checks to credit cards, and they skipped things like digital payments. Countries like China, for example, didn't go to the credit card routes. They went directly from cash to digital payments. So they all have experience, and even here in Thailand, we have experience paying with our phones to make digital payments. But for industrialized countries, we do not. And so people are not comfortable using a form of digital payments. So this central bank digital currency will allow people to get comfortable using digital payments, and that gets them comfortable with using things like Bitcoin and cryptocurrency. They will soon find out, for the reasons I talked about before, this dystopian, privacy encroaching central bank digital currency, that it is not a good form of currency. And in fact, it will be no better than the shitty monetary system that has failed them before. So people will find out that there is an alternative, a better way, a decentralized, permissionless cryptocurrency called Bitcoin or Ethereum or Monero. Because they have been using the central bank digital currency, it will feel very natural and organic for them to convert over to the permissionless, better alternative. In Australia, we even have the government coming out publicly and supporting cryptocurrency, saying cryptocurrency is not a fad, and further going on to say we have to let people make their own investment decisions. In the same speech, she went on to say, while it is frustrating for investment professionals to watch, at some point we have to let people make their own decisions. It's about personal responsibility and common sense. It is incredibly frustrating for somebody like myself who has been in the space for 10 years and has a proven track record of making good investment decisions. I have outperformed every single financial advisor on Wall Street, more than likely in the past decade, probably tenfold, right? But I cannot give you financial advice. It is illegal for me to do that. At the same time, I am constantly reading articles on things like investing.com and Business Insider, where some financial advisor is telling you to go put your money in a savings bond or mutual fund so you can go and earn yourself 4% for locking up your funds for 10 years. That's insane, right? Ultimately, what we need to do is get to a place where the people, you and me, can make our own decisions based on what we believe is best for us. Not having financial advisors that are used to traditional legacy investment tools tell us what we should or should not be doing with our own finances. Why? Because these guys are constantly pressing investment vehicles that come from the banks that really are not aimed at making you any more wealthy than you are today. In fact, they're not even aimed at keeping you above the inflation rate, right? So if you use something like a CD or a mutual fund or a bond, you are going to get less interest than the current inflation rate right now in somewhere like the United States. It is insane. I hope this video gave you a peace of mind and a macro perspective of exactly what's going on in the space right now. I mean, there's a lot more, and I want to cover it in future videos, so make sure that you subscribe and stay tuned, because I want to give you the full picture of what's going on right now. If you understand the macro perspective, the big picture of what's going on, you will definitely be a lot less intimidated by corrections like the ones that are going on right now.